Does Chairman Powell matter? Is Jerome Powell going to be central banker to EM?
I think the Fed, to a certain extent, is always central banker to EM. I think what the markets, my markets, are taking from Powell's appointment is the likelihood of continuity, basically, in monetary policy. It doesn't look like we're going to see a sharp adjustment relative to what Yellen was going to do.
But continuity is easy when it's this quiet. There's no continuity with a 4 standard deviation move.
No, of course.
In Philippine short-term rates.
No, of course. And all we're simply saying is, frankly, we don't think what the Fed is going to do over the next 12 months is all that material to the outlook for emerging markets, given what I've just laid out, a rate cut next month and rate rise next month and 2 next year. We think what matters much more is, do you get a major fiscal stimulus? Do you get a major bond market sell-off because the economy accelerates or because inflation picks up sharply? Because that's the sort of thing that's going to suck the money out of emerging markets. The Fed could obviously contribute to that, but the Fed's not going to move aggressively versus expectations unless you get the growth pickup, unless you get the inflation pickup. And that's why, to us in EM, what happens in Washington right now on the fiscal side is going to be absolutely critical. Our view is the U.S. economy stuck somewhere just north of 2% growth. And we think it's probably going to stay there. But if it doesn't...
But, Jeff...
Yeah.
Sorry, go ahead.
Yeah, no, please.
No, I was going to say, I mean, what happens, when you say what happens in Washington is absolutely critical, but what happens in Washington, you're talking about tax reform. Does it actually help with growth? Because we hear a lot of the CEOs will actually reinvest to shareholders, so it doesn't necessarily impact the economy.
Absolutely. I mean, our economists, to be fair, first of all, they're not expecting a broad-ranging, large tax reform bill, 1986 style. They're saying probably the most likely outcome, if anything, is a modest tax cut, which probably has very low multiplier effects on the economy, because all the tax cuts go to the upper income end where the marginal propensity to consume is low, and they go to the corporates, and there's no guarantee they will invest. So either way, short of there being a massive tax reform bill, we doubt the U.S. economy is actually going to accelerate very much. And that's going to create still, once again, if I may say so, a pretty reasonably fair environment for emerging market equities in 2018.
Okay.